So Mick, what I'd like to do this morning, sort of understand a little bit more from the investor perspective, what you're doing, where things are moving to.
Thor, well, we're a company that's managed out of Australia. We are an English company.
Yeah, on AIM, yeah.
We've been about since 2004 or thereabouts. And we were incorporated to take on and turn Molly Hill from a tungsten project in the middle of Australia from an exploration project to one ready for and into development. That's taken a long time, but we think now we are frightfully close. Along the way, we've picked up a couple of other projects that we like. We've picked them up at what we believe are very low buy-in or valuations. But we have acquired projects that don't need a whole bunch of exploration spend. We have acquired projects that already have resource or are resourced ready, so that the exploration risk is taken out of it. Initially with Molly Hill, as I said, we've been at Molly Hill at this for some time now. I joined the company almost 11 years ago.
What's your background?
I'm an accountant, but I've been in the mining industry since 1974. Worked for a couple of quite large outfits. Bougainville Copper, part of what is now Rio, in those days CRA, Western Mining as a mine accountant in various remote locations, and have been in the junior mining space probably now for about 20 years as a company secretary, and then as a director, chairman, promoter. It evolves as you move through time.
Can you just sort of take us through who else is on the board or who else is on the management team in terms of, experience clearly, but the ability to drive the company from where it is today to where you want it to go?
My right-hand man is a guy called Dave Thomas. Dave Thomas is a mining engineer who has managed and run small and large mining projects in a whole bunch of places in the world. Most notably, he was general manager of Olympic Dam for a period of time, which is, as you probably know, the world's largest known uranium resource and one of the probably about the number 6 copper resource on the globe. He ran that for some time. Also on the board, we have Alistair Middleton, a London-based geologist who has done a bunch of work for in the exploration business. He worked for Standard Bank for some time, evaluating projects for project finance, and until about sometime early to mid last year, he was a director of another London listed outfit who happened to be our largest shareholder. Also, we have Richard Brady. Richard is a geologist, our exploration manager, senior exploration guy. He's worked for a bunch of Australian miners, underground and open cut, in resource development.
In terms of where you position the company now, you're moving sort of from exploration through to what?
We've never really been an exploration company. We've been a company that has acquired advanced projects that might need some exploration dollars thrown at it to round them out, but we have acquired projects that that have the potential or the capacity, with a bit of love, to be taken into development. Right. And so in each case, we have acquired projects that have known mineralisation, and in the case of the one in Nevada, quite a large resource already. We just happened to buy it from an outfit, a company who wanted to go and use their shareholders' money to make games for mobile phones when that burst was on. Right. So we have projects that are all in the development phase. None of them in the exploration phase. That doesn't mean there's not exploration money to spend, but the exploration risk is taken out. perhaps as from an investment point of view, some of the expiration sex appeal has also been removed because, the 10 bagger from finding 100 metres of 6 grams, for example, that's not what we're about.
So just in terms of the people working specifically on the development component, then that's going to be Dave Thomas and Richard Brady specifically on not necessarily on the ground, because where are they based?
They're based in Adelaide with me.
Oh, they are. Okay.
Yeah.
And then I know it's Ray Ridge, the CFO.
Ray Ridge is CFO and company secretary.
He's in Adelaide.
Ray is an ex-chartered accountant with Arthur Anderson's and worked for a couple of large construction companies as financial controller along the way. And he's now a guy who does CFO and company secretarial roles for 4 or 5 listed companies in Australia.
Thank you for going through the team there for me. Justin, I think we've got a bit of information with regards to the market cap. What's the market cap at the moment?
We're probably around £10 million. On a good day, we're a bit higher. On a very bad day, we've dropped we'll probably drop a little lower. But
so what
we've got a bit over 700 million shares, and I haven't got. Well, I guess I can look at it on my phone and find out what how we're going at the minute. But we've been as high as about 23 million pounds 11 months ago. The markets haven't been kind to some of us, and I guess we're included in that.
And so just in terms of you mentioned shareholders earlier. Like who are you institutional, retail? I mean, what do your biggest shareholders look like?
Our largest shareholder is Metal Tiger, AIM listed company over there in London. Mm-hmm. They own about 10-11%.
Right. Yep.
Then there's a guy called Paul Johnson, who's a relatively well-known London investor and promoter, who's got about 5%.
Yep.
And then there's me with about 5%, with just under 5%.
Right.
And then the rest of the directors have about a 2% between them. And the rest is a bunch of there's a group of 30 or 40 UK-based shareholders who broadly follow Paul Johnson.
And what do they hold?
They're an investing group. They're a loose investing group. Okay,
and they're sitting on what?
And they would hold. Well, it's pretty hard to know because they trade as one expects they would.
Yep.
And most of them are held through nominee companies. I would expect they hold between 15 and 20% between them.
Right, and then I guess there's no strategic investors there per se, other than
no.
Right, and the rest therefore probably be UK and Australian retail.
Yeah, largely UK. Australian retail is probably 20-25% of the total.
Okay.
And then if I'm a 5% shareholder, I'm the largest, one of the largest Australian shareholders by a fair margin. Our broker, this investing group comes through is SI Capital out of Godalming in Surrey. I don't know if you know those guys.
I do. SI Capital, I do. I assume they've got a little piece of this, have they, for raising money for you?
Well, our model over the last 2 or 3 years with these guys has been to do a placing to them at market, at zero discount to market.
Yeah.
But they get a warrant with the shares for either 1 for 2 or 1 for 1. Yep. Depending on the deal we strike, normally at about a 50% premium to market, and so that's the effective discount for them. And they would raise a fair bit of money out through them on that basis, and there's been a fair bit of warrant conversion going on in recent times. I think they've picked up about best part of £600,000 in the couple of months leading up to Christmas out of warrant conversion.
Right.
Which means we're reasonably well cashed up, but people have got some investors or some on the bulletin boards are a bit annoyed by the fact that at the time we had a share price of about 2p, and people were selling down to 1.3, 1.4 because they were exercising warrants at 1.2.
And what was their hold period? I mean, were they restricted for a period, or were they able to sell straight away?
No, they're not restricted.
No. Okay. You talk about the market cap being around sort of 22, 23 million, beginning of last year. I mean, what do you think has caused that drop, apart from the usual, junior mining stocks being less interesting than cannabis and Bitcoin and etc. What do you put it down to?
It's not just one thing. I have to confess that I think we overpromised and underdelivered in terms of timing of release of the feasibility study on Molly Hill. Yeah. People were expecting that, and we had indicated it would be ready well before we finally got it out. Yeah. And you get marked down for if people say, if you say it's going to be ready in March, April, and it takes till August, well, people are going to get impatient. Yeah. And that's what happened. I have to cop the blame for that.
And what was the problem though? Why was it delayed?
Look, a bunch of things, bunch of work being done by various consultants just took longer than had been promised to us. Okay. We should have anticipated that, but we did to some extent, but we didn't factor it in nearly enough. If you say we're doing a feasibility study and don't give people a rough timeline of when it'll be out, you won't get thanked for that either. So. Perhaps we were in the end, we were too ambitious about the timescale.
Okay, and what are the other major catalyst events coming up this year?
Events coming up this year, in the first instance, it's related to an acquisition we made during the course of 2019, where our flagship Molly Hill deposit has about 30 k's away, about 13 outcropping tungsten deposits. Have been known about for well over 40 years, and I've been trying to get my grubby little hands on them for the last 6.5. And finally, during the course of the last year, we did a deal to acquire 40% interest in those tenements and exploration management. 30 kilometres away from where we plan to build the Molly Hill plant, we have, while these are known tungsten deposits because they outcrop at surface, have largely not been drilled, and any drilling or exploration work done on them dates back to the 1970s. So we're now going through the process of getting clearance from the traditional owners to go and get on that land and drill, which process you must do in Australia, as I'm sure you're aware. And we would hope to drill there in the first quarter of this year, so February, March. Okay. I've been saying February for some time. Yep. I still don't have approval from the Aboriginal Areas Protection Authority as of today, so it might be more like March than February. So, but I know the process is underway. That's pretty exciting for us, right? Because it turns Molly Hill from a 7-year underground mine. Plus a couple of years of 7-year open cut mine with a couple of years of underground afterwards, to more like a dozen or so years of open cut mining, and adds not just tungsten to our tungsten and molybdenum suite of products at Molly Hill. It also adds copper. Right. Drilling those and a successful drilling outcome there, we think is going to be terrific upside for the company. Mm-hmm. The next catalyst, and perhaps before or during that period, is finance for Molly Hill, where we believe that sometime during the first half of this year, we will get project finance for Molly Hill.
How much cash are you sitting on at the moment?
Cash, Aussie sterling, about 1.3 million pounds.
And when does that see you through to?
Late third quarter, early fourth quarter.
Okay, and then you're talking about a raise now. I mean, how much are you looking to raise?
We're not looking to raise at all.
You're not. So sorry, I misunderstood when you said you're financing. What did he mean?
We're looking. We're looking for project finance for for Molly Hill.
Right.
Sorry, and Molly Hill has a project finance requirement of 43 million US.
Right.
So that's to build the operation. But we're not looking for finance for. We're not looking to do a raise for to keep the lights on, to pay the nomad and carry on with the little bit of exploration and other activities you do to keep the company going. That's
specific project finance for Molly Hill. Okay, got it. Understood. So that's 43 million. And so what's the timing on that particular component?
I would hope in the first half of this year. We engaged Argent partners out of London in November or thereabouts to do that. They've been working on on their own version of the information memorandum and the financial model that complements ours and roughly gets the same sort of numbers. So I guess that validates what we've done.
Yeah.
And they're out now talking to a whole bunch of people, some of whom we've said, well, you should talk to these guys, and some of whom they have access to outside of our network. If you think the process is going to take 2 or 3 months, well, you're being foolish. If you think, but I think 5 or 6 is probably from now is probably doable. Where now that they've done virtually the bulk of the setup work that they needed to do to get started.
Okay. And I mean, what's the general feeling about? Obviously, tungsten's a very strategic mineral. What's the demand been like in the last year and price in the market? I mean, I'm sort of not quite up to date on that.
The last couple of years has tungsten's very volatile, and we must acknowledge that the price it's priced in metric ton units, which is 10 kilos of viable tungsten trioxide, not even the metal, which is what it is. But if I take it back to kilos, tungsten in early 2016 was about $16.50 a kilo. It went up to in about June last year of about $35 a kilo. It's now about 27, 28. And we would get roughly 80% of that price, because that's the price of a downstream product from the concentrate that we would produce. So we would get 80% of this, what is known as the APT price.
And what's the route to market for tungsten? I mean, where's that going? Who's buying it?
Tungsten's the hardest metal there is. It's if you think of steel as being hard, but you want to punch through steel or drill through rock, you need to put a bit of tungsten in the system or coat it on top. There is some tech use, but it's also in wear parts. If you think of a bit of machinery where you've got bearings under pressure being moved around backwards and forwards, there's a bit of tungsten in those bearings because they're hard and extraordinarily wear resistant. So it's an industrial metal.
Right. And the main buyer in the market is who at the moment?
It's relatively evenly distributed around the globe. China, big user of tungsten, but also by far the largest producer.
Yeah.
About 75% of the world's tungsten.
Right.
Then the rest is relatively evenly distributed between North America, Europe, and places like Japan and South Korea, etc.
And given the volatility of tungsten pricing, I mean, how that's I imagine directly correlated to usage. So the biggest user being China, biggest producer being China. I mean, are they some way controlling the market? Does it make it difficult for you, or are you seeing a sort of smooth transition over the next 7 years?
There is something of an opportunity. There's a whole bunch of people around the globe. In the US, Department of the Interior, for example, has classified tungsten as a critical commodity. And the US produces no tungsten at all domestically.
Presumably military.
Recycle a bit, but there are no tungsten mines in North America that operate right now.
Right. So that's a strategic mineral for them, presumably military.
Yeah. Well, it does have military uses as well. and of course they don't particularly want to source so much of their tungsten products from China.
No.
Europe is more or less self-sufficient between the tungsten produced on the Iberian Peninsula, in Austria, and also in recycling. About 50% of Europe's tungsten is demand is satisfied by tungsten recycling. But there is still a deficit, and they are looking for alternative sources of supply. And then South Korea, Japan, other parts of Asia still use tungsten, and some of those would rather buy from people other than China. And then there's US, which believe it or not is riddled with tungsten deposits, but there are none of them that are close to development.
Right. So investors should feel comfortable.
3 or 4 years.
I mean, obviously, strategic minerals very important, but investors should feel comfortable about pricing going forward. Would you say, or is this the same volatility expected?
Look, I hesitate to forecast metal prices, but the general belief is that tungsten is going to at least hold its own for the next 5 years or so. It will probably go up. Roskill is saying it'll probably go up in for the next 2 or 3, and then might settle back a bit. But they say that overall there will be a 2% growth in annual demand, 2 to 2.3% growth in annual demand for the next 10 years. Now, as soon as someone like that makes that statement, obviously it's going to be wrong, but they are better placed than people like you and I to make that call.
And I guess that's not something you can control, but talking about the things that you can control in terms of your business, and where do you see the value creation coming from? You know, what are you doing for investors or potential investors to kind of drive, you know, market cap or enterprise value, however you want to measure this, but ultimately share price for investors? What are the core components?
What we've been doing for a start with Molly Hill is doing a feasibility on something that, if you believe our numbers, and I certainly do because I had a fair hand in the development of them, we will be one of the lowest cost tungsten producers on the globe.
But meaning what? What is your cost?
Meaning we're going to be producing tungsten trioxide or scheelite concentrate for about $100 a metric ton unit or $10 a kilo.
That's US or Australian? US.
That's US.
US, okay. Does that put you in the sort of top quartile in terms of cost production?
The bottom quartile is largely made up of those who produce tungsten as a byproduct.
Right.
Then the second and third quartiles averages out at about just under $20 a kilo, if you believe Roskill's numbers. And again,
right.
I think I have no basis for not.
So your costs are low. So that's good.
Costs are low.
What's your resource
we are
numbers?
in a jurisdiction that's pretty friendly.
Yeah, Australia pretty friendly. They get a huge tick. But what about your ability to find it and bring it out of the ground and in volume?
We're going to be mining relatively low volumes. This is a low volume, high value product. Sure. We're also going to be producing, and one of the reasons why we're so low cost is we're also going to be producing molybdenum.
Right. Okay.
About 20% of 25 to 25%, depending on price assumptions, of our revenue will also come from molybdenum. We will produce a molybdenum concentrate and a separate scheelite concentrate.
Interesting.
And molybdenum is also something that's got a bit of appeal in the last year or so, and I'm told by those who by Roskill, but not just Roskill, but those who are in the molybdenum space specifically, that the demand for moly is going to be stronger than the supply of moly for the next 3 to 5 years.
And for those who don't know the uses, what's molybdenum used
Molybdenum
for?
is used in the grades of stainless steel that are relatively high quality.
Right.
So the more moly you have stainless steel, the higher the quality, the more corrosion resistant it is. And other specific, some of the specific applications, oil and gas pipelines seem to use more molybdenum in them than a bunch of other than in some other applications. But the really high grades of stainless steel have more moly in them than others. If the price of nickel goes through the roof for other reasons, moly is often substituted for nickel in stainless steel, just because it becomes an economic thing. At a certain level, it becomes more economic to put moly in than nickel. Moly is more expensive than nickel. That's probably 2.5 times the price of nickel, but you use less of it to get the same result in your stainless.
Okay, I mean you've talked about some of the opportunities there, certainly a couple of catalysts. With regards to, I mean, what are the threats to the business? I guess economic climate continues where it left off in 2018, but
at the highest level is if we can't get the finance for Molly Hill. That will hurt.
Yeah,
we have to acknowledge that. We're not and for that reason, we're not a one-trick pony. We do have a copper project here in South Australia that is shaping up quite nicely.
Which project is that?
The Kapunda Copper Project in South Australia.
Right. Do you want to tell us a bit about that?
Where we have a resource of almost 120,000 tonnes of contained copper. That's about $700 or $800 million worth in the ground, US.
And have you got cash to be able to develop that?
This is an in-situ leaching opportunity.
Mm-hmm.
It's not conventional copper open cut or underground mining. It's a historic copper deposit that was mined 150 years ago.
Right.
And they took out some extraordinarily high-grade stuff and put it on a boat to England for processing, and left a low-grade halo that is suited to, appears so far to be suited to in-situ leaching. Mm-hmm. And the Australian government has given us an almost $3 million grant to demonstrate not just proof of concept but feasibility. So that is basically fully funded through the feasibility.
Oh, very good.
And when you say fully funded, I mean
taxpayer, which is very nice.
Oh, right. So tell us about how does that work in terms of the funding?
That's the Commonwealth Government has funds research activities, and we have engaged with them over the last year or two to get some funding to do research for an application that, if it works at Kapunda, should work in a bunch of other what we call stranded copper assets all around the globe.
Interesting.
So when you say fully funded, it's fully funded through to what precisely?
Completion of feasibility. And
then it has some book value at that point, presumably.
Well, it has a certain value now because there is a resource. There is a JORC compliant resource. But there are inherent risks about about the value of a JORC compliant resource. It's once you get it through to a demonstrated feasibility study, then it becomes a much more valuable proposition.
Absolutely.
Now we don't have 100% of this. We are acquiring 60% of a company that is acquiring 75% of the project.
60% of a company who is acquiring 75. Okay, thanks for doing the maths. That's great.
I've done it a number of times on this.
It's early here. That would have been a stretch.
You've only had one coffee.
Indeed. Okay. So you've got 45% of that project, and when would that feasibility come through? When does that value get created?
It's certainly in the next 2 years, but it's well, it's less than 2. It's more than 1.
Got it.
Okay, so that's good. So there's some value coming down the line there. So if we come back to Molly Hill, and I appreciate the project finance process has started with Arjun in London, and I guess Q1, beginning of Q2, you would look to sort of have indications as to whether that money is available to you. Let's assume it does for the sake of this conversation. I mean, how does that play out in terms of the development timelines for that?
Assuming, let's say the money is available on July 1, because it's a date. The construction period is 12 months.
Got it.
Okay.
So on July 1, 2020, we should see the first batch of concentrate rolling out of the gate.
Okay, so that's pretty good.
If we make that timeline, I'm sure on July 1, 2020, there'll be lots of scrambling around and maybe not a truck departing down the road with concentrate on it, but it's that order.
Okay.
We have an engineer who says it's you could probably compress that time frame by a couple of months, but let's stick with 12 months for now, because we'll get bitten in the bum somewhere.
12 months time, you're potentially in production. And then what does that start doing for you in terms of contribution to revenue, bottom line, etc.?
Look, the first couple of years at Molly Hill are extraordinarily strong. The grade is high, the stripping ratio relatively low, because you manage the mining that way. And the first couple of years, you get project payback within 18 months.
So just coming back to that, so when you're talking about the project finance, you're looking at what, entirely debt, or are you getting some equity in there, or what's that structure look like?
It's going to be a mixture. Yeah, we both know that. There's and some of the debt will come, we believe, from people who want the concentrate, the molybdenum concentrates, and the scheelite and the tungsten concentrates. Financing things of that nature is not completely foreign to them. They're not all that quick to drink from the trough, but they do it. And these are commodities that, or particularly tungsten is a commodity that can't be hedged. So let's not pretend it won't come without challenges.
But it's going to be more conventional finance than any of these highly structured leverage finance.
The highly structured stuff we're going to try and avoid that for as long as we possibly can. Because it's a pretty slippery slope.
Agreed.
Now that doesn't mean we're not open to all sorts of discussions. We obviously have to be. There have been discussions with various people about a joint venture, for example, where someone says, "Well, I want X% of this project. How much does it cost me to get control?" Well, if and that is a known pathway forward that we would hope take a lot of the pain and suffering out of the financing. If we were to retain 100% of the project, there's going to be some debt, but there will have to be some form of dilution somewhere along the line. You either dilute at the project basis or you dilute at the company basis. Right.
Okay. So you're going to this with your eyes open.
Yeah, and you can't. I don't know that for a small company there are too many other options.
No, agreed.
But there are a couple of people who said who have registered interest in saying in having a slice of the project, and for that, now they will take on if they seriously do, they will take on a serious lump of the heavy lifting for project finance, one would hope.
Right. Okay.
Otherwise, I'm not doing a very good job for our investors.
There is that. The investors. Always comes back to the investors. Okay, so understand that. So with regards to Molly Hill, you will know, I guess, a little bit more this quarter as to where the financing component's going. You've got the team on board who you feel can deliver that project in terms of that development phase, and we're talking 12 months or so. Payback 18 months, which is impressive. What's the IRR work out on that then, I guess?
The internal rate of return is about 58%.
Plus 50%. That's
but it's
58.
very price dependent. You don't have
of
to
course.
do much to the price to knock it back to 30%.
Of course,
for
of
example.
course.
But that's just a function of the mathematics. But, the net present value Aussie dollars about 100 million Aussie. So in US dollars, I guess that's roughly 70, somewhere between 70 and 75, depending on where you call the exchange rate at the moment.
So, and I noticed one other project on here, which was something in Nevada. Is that still
Pilot
on the
Mountain
books?
Tungsten project in Nevada.
Yeah, is that still on the books?
Oh, it is indeed. We own 100% of it. We're still working at it. It is the largest known reportable tungsten resource in the US. There are a couple of larger in Canada that are not currently operational and not in development, but in the US. And the US is polluted with lots of little tungsten deposits all through Utah, Nevada, into California, and probably a few others as well.
What's your exposure there? I mean, as in, what are your liabilities there in terms of money that you need to spend on that, or are you just doing anything?
The way the permitting goes for exploration tenements in or patented and unpatented claims in the US is you don't have to spend any money to keep them in good standing. You pay an annual rental, and so for less than 100,000 US a year, that we keep the tenements in good standing, even if we don't do anything at all. Now we're obviously we're not going down that way. We've got we have added to the resource in the last couple of years. There are 4 tungsten deposits, all within 3 or 4 kilometres of one another, one much larger than the other 3. And we've done a scoping study that says it's worth doing through the kitchen sink at it by way of costs and pretty awful scenarios and limped through that. And that says it's worth doing. We are now doing some work with the environmental agencies on permitting. There's some permitting work been done, but there is more to do. And even in Nevada, the permitting process is a minimum of 3 years. There's some work we're doing with some power utilities on the cost of delivering power, etc. And there will be a small drilling program or 2 there in the next year, where a couple of the inferred resources, we want to turn them into indicated resources so we can get them into the inventory for feasibility study.
So the 100% of the cost borne by Thor. Are you also exploring the ability of farm-ins and JVs?
Oh, of course.
Yeah.
Of course.
Right.
Very, very happy to entertain those discussions. This has got if you multiply the number of tons of contained tungsten in the ground with the metal price, is over $1 billion US worth of stuff in the ground right now. There in the pilot mount, in the resource. And we've got resources on 2 of the 4 deposits. It's probably going to end up being at least 50% large.
Right, okay.
It's quite a tidy sized resource. It'll be an open cut mine for a large part of its life. At Desert Shearlight, the largest of them. The others will be a mixture of open cut and underground.
When will you have sort of further updates as to what you're going to be up to next year?
Probably during the 3rd quarter of this year, there'll be some work being. There'll be a small drilling program. There is some work being done with others. We're having some metallurgical test work done in Guangzhou in China.
Right.
The second phase of metallurgical test work, we demonstrated back several years ago that we could produce a saleable concentrate, but not to the level of where you had a costed flow sheet. We're now going back and doing that work now.
Right. Okay.
That'll take the time it takes. I suspect there's another 2 or 3 months worth of work there as they try one reagent and one grind size and then go back and optimize and try another, etc.
Okay.
This deposit proving a little bit tricky, and in fact some of the processing that worked quite well 5 years ago doesn't appear to work as well this time round. and so they're attacking it from another direction. So it takes a while.
It takes a while. So again, in terms of just understanding where the value creation comes in terms of timing, as far as investors are concerned, you would look to sort of see something over the next sort of couple of years on this one.
It's a couple of years from the feasibility process will take a couple of years. Right. We would hope within 12 months, in the next 12 months, to produce a pre-feas. I think we can do that, but a bankable job will take it won't be done in that time frame.
Just looking through Kapunda here. I mean, can you tell us can you come back and give us a little bit more detail on where you are, and again, answering that question about where you think the value creation comes in, because obviously you're at a sort of lower market cap, lower share price at the moment. We're just trying to look at where these value creation moments may start having an impact, and is it something that investors should, if they feel confident will be delivered, should be getting in early at what is currently a heavily discounted price, I guess you would argue.
During the course of the next year, during the course of 2019, we'll be doing a fair bit of field recovery work at Kapunda, actually pulling copper out of the ground as part of the process of demonstrating the feasibility. We'll be doing that. That's a staged process. We'll be doing it in one area. In the first instance, we will just be pumping water into one borehole with a dye in it, for want of a better usage. So if something isn't going to affect the formation at all and isn't going to upset the authorities, and then ensure that you get the flow through from one borehole where you pump in to another borehole where you pump out fluids that have dissolved copper in them. We've demonstrated that with the core. We've demonstrated it on a tiny scale. We now have to do it out in the field on a slightly larger scale. And then we'll do a field recovery trial for copper as well. So there'll be some catalysts there to say, hey, it's still working, fellas.
Okay.
And this will be extraordinary cheap copper production. And if you look at the resource on the presentation, the grade isn't all that high, but you don't want high grade for in situ recovery because it's a surface area thing. Very high grade copper, there's not enough surface area for the lixiviant to dissolve the copper in a high grade deposit. You need low grade for it to get it all, or to get a large portion of it.
Right. Okay.
There's another project held by a company in Arizona in the US, held by a company called Excelsior. Called Gunnison. They've done feasibility on this project on producing copper in exactly the same manner we are talking about. They claim that they will produce copper for about $2,900 a ton.
Okay.
That's a useful parallel. It's quite a bit larger than Kapunda, but it's an indication that the capital cost of an in situ recovery operation is much lower than a standard mining and processing operation, and the operating costs are also quite a bit lower.
Yeah. Okay. Understood. So just in summary, so we've got sort of the three projects. Obviously, Molly Hill, which you're looking to get the finance for development sorted in the next 3-4 months. Well, certainly some point by Q2, one would hope. And then construct over a 12-month period, or construction commission over a 12-month period. You've got Kapunda, obviously you've got some permitting and to deal with, and then the pre-feas and bankable feasibility study in order. And then the potential of Pilot Mountain in Nevada, where it's a significant resource, which again, you'd hope over the next 12 to 24 months to actually start generating some and creating some value for shareholders, I guess initially, but also clearly for the company.
I think if you took at it in terms of when things are ready to generate money organically rather than by project sale or partial sale, pilot Molly Hill, you would be ready to generate money in about 18 months from now.
Right.
Kapunda, about 2 years. Pilot Mountain, 3 to 4.
Okay, understood. Look, Mick, thanks very much for that summary. What we'd like to do is get a regular update from you as to how things are progressing, and be able to talk people through some of the regular activities that you're planning for this year. And obviously, if you're coming through London, it'd be great to hook up with you as well.
I get to London about 5-6 times a year, so
Fantastic.
plenty of opportunities. Yeah.
Well, great. It'd be great to see you when you come through. And thanks for the time this morning. Thank you very much for watching our video. We do aim to give you informed and intelligent information with which to make your investment decisions. So if you liked what you just saw, please give us a thumbs up. And if you want to see more insightful, in-depth, honest and unbiased interviews, then please click the subscribe button. So thanks again for watching, and we look forward to seeing you again soon.